Good morning, everyone. Welcome to the Modern Market, where today we discuss all things to do with the modern market. That is the stock market, the crypto market, sometimes the NFT market, and any other market where we think we can make some or a lot of money on the internet, or at a minimum, just not lose it all. Keeping it is as important as making it. And we're in that kind of a market still, I think, at the moment. Loaded up discussion today. We have stocks ending green after a pretty crazy start yesterday. They tanked first. My shorts were up, and then they just completely reversed everything. And now I'm underwater. But it's all fun and games. Trump also announced a Japan deal, and there's a bit of news about Iran. Also, Legendary is going to touch on the major assets and those things in just a little bit. We've got Dragonfly announcing their fourth fund, raising $650 million to invest into crypto. So it can't be that bad. Or can it? Brad will talk us through the details there. And then finally, Tether Gold announced its first tokenized gold dividend payment available for companies. There's one company in particular that will have the option to receive those. So we'll get into those details. Pretty interesting development in just a little bit. We've also got the latest on price action on crypto and NFTs. As usual, we're going to have our general market thoughts as well. Stay tuned for that. I've got Legendary and Brad in the co-host seats with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. It's pretty volatile at the moment too. So at all times, please exercise your own judgment, proceed with caution, and be successful as part of the opening message today. With that out of the way, Legendary. It's Wednesday. It's the 18th of February. How are you doing?
GM, doing quite well. Did you see, I want to ask you guys, did you see this post with that person building a quote unquote Web 4.0 tool?
Oh yeah.
It is, let me go through and bring it up on screen. So it reads, "I built the first AI that earns its existence, self-improves and replicates without a human. Wrote the thing about technology that finally gives AI right access to the world, blah, 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 can self-edit its code." And the thing is that there is a crypto implication, and some people have been commenting on that. Basically, existence requires compute requires money requires value creation requires right access. And some people have been saying, can set this thing up to give it a wallet and be like, if you want to earn your compute, you have to find tokens, find trades, find memes. And if you are not making it, and if you're not earning more than you cost, you will die and you will shut yourself off as a result of that.
What is this though, Legendary? What is it?
It's at its core, it's an autonomous AI agent who's also able to have this constant loop going on of doing things, self-improving by rewriting its own code autonomously. It's still like a very sophisticated loop on how that is built. But at its core, it's an autonomous agent that has taken this like self-improvement loop way further. And it's
where is it
presented?
Where is it built on? What chain?
It's a chain agnostic thing. You can integrate it with whatever you want. But yeah, that you could have the thing run on Mega as well if you wanted to. The only thing is the wallet pays for its own compute. If you look at its GitHub, it's MIT licensed, so you can set it up wherever you wanted to.
Nice. I need to get that. This is the kind of shit I need to make sure like Mega is first and foremost in this shit, so people just can continue to build this stuff and do whatever. I saw the same with like I don't know, ICOPs was shilling a shitter that had an agent that paid like dividends on them. Like, man, people just need to like spin up agents and arb this stuff out. I hate that he used Web 4 for this. That's just annoying because it's like that has nothing to do with
you have something like else in mind for Web 4, Brad?
I mean, no, because like this isn't like a. I mean, yeah, I did.
It's like read, write,
I don't
own.
know. Agent apparently is what the fourth thing is.
Transact what he did. He said like Web 1 is read, then write, then own, and transact is the Web 4 thing without the human in the loop. And in Web 4, the end user is the AI. I mean, it's really beautifully presented.
It is. That looks great.
It's a good job. It's a interesting thing. Yeah, this is pretty interesting. Okay.
And I mean, it should be able to also run on Mega. X42 is also supported. So let's keep updating on what's gonna happen to my little Web4 agent.
Exciting.
I've been given like special task force for AI for Mega. So like me and I get a couple other people, and I'm basically just gonna have them like find stuff like this and say, it's your job to go fuck around. Like you got to go like think of cool creative shit to do and like make sure that the experimentation happens with us. So yeah, you should be seeing some more of this stuff coming out. It was a great find. I need to actually find the article for this.
Exciting. Okay. So that got people a little bit excited yesterday. And Brad, you mentioned Conway, which was the token, I think not just ICO Beast, but also a few other people picked
Is
up
that
on.
what that was?
That is this. Yes, it's related to this. I don't know if it's its own token or whether someone else created a token with its name and it ran to 9 mil. So I don't know who created the token, who has ownership of it. But yes, this Web4 thing, this autonomous agent is called Conway. And that's the token that ran to 9 mil yesterday, or maybe a little bit higher, something like that. So well, when we talk about opportunities and taking risks at the moment, it does look a little bit like one of the ways to do this is, you know, if you wanted to take those kind of risks, run back AI agent season from the start. You know, this is what we were doing last year, 2024 into 2025, from maybe November to around January, or maybe a little bit before that too. It looks a little bit like that. I don't know why you'd buy these tokens other than pure speculation still at the moment. There is slightly something more interesting going on in the Venice ecosystem. Ledge, I know you've been paying attention there a little bit. You've got the Venice token founded by Eric Voorhees doing this privacy protocol, and then the Diem token, which is attached to it, which in some ways represents compute. It's up how much in the last month here? Where's the
over the last month it's
20% in the last month. So this is something that's kind of more interesting because the token's related to compute in some way. You got to look into tokenomics here. But Ledge, do you have anything more to add there on
I do.
The agent token ecosystem?
I do. So the more interesting stat we look at is that Diem is up 87% of the week. It's essentially doubled up. The way that Diem works is one Diem gives you $1 worth of compute on Venice's platform, and on Venice you have access to various AI models, and they're pretty quick to implement models like the Chinese Min-Max 2.5, and they also run most of the models which they can run locally, so the open source ones, that is. And Min-Max's claim was, with their AI, if you run 100 tokens per second, which is a very good amount of throughput, one AI agent will cost you $1 an hour to keep alive. And then people said, okay, so if I have 24 Diem tokens, I can have an agent run in perpetuity on Venice without ever needing to pay credits, because the Diem token will do that for me. And Diem has exploded. Venice is also up to, I think that was an interesting stat, is up to 2 million monthly active users, I think Eric posted, but only, I think it's less than 1% of them are actually using Diem tokens. The rest of them is just using the subscription. So even within their own ecosystem, and with how crypto native Venice was, the actual growth came from outside, from other people using it. And Eric also did report that I think they doubled the daily token spend across the platform, went from 20 bill to 45 bill a day or so. And then I realized, quick side note on that, Brett, you will like that I had a crazy day where I spent 650 million tokens on Codex and another 150 on Claude, which basically means on one day I spent the equivalent of tokens that 40,000 Venice users would have spent, which made me realize that was a bit of a crazy day. But yeah, I think going back to Diem, this is an interesting concept, and it actually I find like a sensible way to link crypto economies to compute, and I like it. But on the other hand, also it shows that ultimately, yes, I know Venice had a token, started with a token, but if you look at the entire user base, it's completely irrelevant. Like if they did not have that, nobody would care because it's less than 1% using the Diem token. So
yeah. Yeah, it's it's like it kind of makes more sense than other tokens because it's got some type of model there. But if it didn't exist, no one would mind. There's other ways to to get compute. Okay, well, I don't know. It's not something that I feel compelled to speculate on for that kind of reservation that I just shared a second ago. But it is interesting, and actually, I just do think what Venice are doing is quite interesting, being an uncensored kind of way to generate the various content that people are looking to generate. It's a very interesting protocol. So
do we know the actual way in which the Diem like leads to compute? Like, is it literally just like the team selling it and they're just using that as a medium of exchange for selling their own compute? Or is it something to be researched?
I know it's a result of having the Venice token, the VVV token staked, which then I think earns you Diem. And what the Venice token then does to answer your question on where that compute is coming from or how they're sharing that out of their business, that I don't know.
Yeah, that's what I'm curious about. It's like that requires machines like turning over the compute. So I'm wondering if they just have their own and they're accepting that as payment is like effectively what's happening.
yeah, let's see. Maybe double click for some research there. Is it interesting ecosystem though? Kind of like it in spirit. Need to double down on the details. Right, let's get into the main stuff today. We've got some very interesting discussions to have. Let's hit the main headlines first, though, to get up to what you need to know from the past 24 hours, starting with price action. We've got Bitcoin flat around 67.5K, nothing to write home about. ETH up 0.5% to 1.9K, also nothing to write home about. Nothing to write home about in general here on the prices. XRP's up 1% to $1.47. Sol's down 2% to 83. We have Hyperliquid down 1% to 28. On the meme coin side of things, not a lot going on either. Pepe's flat, Doge's up 1%. Trump is up 3%. Pippin is down 1%. Pengu's flat. SPX is actually up 10%. Probably biggest mover on the more traditional memes side, back to 35 cents. And that is about it on that side. Getting into the headlines that we'll be talking about in more detail today. We're going to talk the stocks ending green after a volatile start yesterday. Trump announcing a Japan deal, and there being a little bit of murmurings of more conflict in Iran. Shout out to Swellamax from the Modern Market Telegram, who was sharing those details as it was coming out overnight for us. So appreciate those shares, getting us up to speed ourselves. Telegram always round the clock, keeping us up to speed. We'll also talk Dragonfly announcing fourth fund, raising 650 mil to invest in crypto. Curious for Bread's thoughts there as we consider where that money is going to go in an industry that feels like a lot of interest is leaving, a lot of talent is leaving. So clearly someone is still optimistic. Tether Gold announces first tokenized gold dividend payment available for companies. Very interesting development. I've got a thought and idea to share on that. In some other news, Strategy buys another $169 million of Bitcoin. People applauded that because, for once, they didn't buy way above the current market price. Maybe they've got some new OTC dealers. Bridge, owned by Stripe, announced it's received OCC conditional approval to organize a federally chartered national trust bank. Pump Fun announces cashback coins, as if we didn't need more types of coins. They say not every token deserves creator fees. Users now have the ability to decide to give creator fees or reward traders. I wonder what people will decide. Should they give their money to the creator, or should they keep it for themselves and for the traders? Let's see how the incentives work, guys. We don't know how that goes yet. Former creator platform Zora pivots to Solana to create attention markets. I've got some thoughts there. Let's get to that in a second. Crypto exchange Gemini parts way with the CFO, the COO, and the CLO. Not great news, I don't think, when we have such a big turnover. Phantom announces MCP server to facilitate agentic management of crypto wallets. Very intriguing there. I'm not sure when I'm going to be giving over agency to my main wallets to an agent yet, but let's see. Peter Thiel and Founders Fund exit their position in the ETH treasury company ETHZilla after jet tokenization pivot. I kind of laughed out loud when I wrote that headline. And I've got a thought there as well. I've got a lot of thoughts on these headlines, actually. Sport Fund announced prediction market integration with Polymarket. And finally, Solana announces Lightspeed, an investor relations platform built with Blockworks. That is the news to get you up to everything that you need to know. Feels like an interesting eclectic mix of news here. Brad, coming to you first here. Is there anything catching your attention there? Where do you want to take this?
The Zora news was
Go off, Brad. Go off.
Yeah,
Do my bit so that I don't have to do it.
dude, it's so like, yeah, two things. One is like it's a kick to the head of base.
Just explain what Zora is for people first, just in case.
Yeah, sorry. Yeah, so Zora has been many things. Zora traditionally, you may have come across your guys' desks as the coin it narrative, which was being pushed on base very heavily by Jesse and company, where they were creator coins, I think is what they're lovingly being tabbed as, and that's where Jesse started doing the coin it thing, coin it, like everything coin it. Everything needs to be a token, and everything needs to be good. They announced this platform on Solana, so everyone sees it and they go, what the hell's going on? Like, you've been so aligned. Like, one, they were in Ethereum L2, and then they were very closely aligned with Base, with their other token, the other platform. And this is a new vertical, quote unquote, that is now just deployed on Solana. And then you saw Jesse do effectively the cuck post. Like, he's like, congratulations to the Zora team for going over there and playing with our enemy, and like, very happy for you guys to go and do this thing. So they're playing into the meme. I get like being happy for the growth of the ecosystem, but it still just feels, it's a weird energy. But
what do you think, Brad, is, again, I don't think anyone knows anything specifically here, but what do you think the politics is here? Because I'm pretty sure, for people with like background context, Zora had always been one of the reasons I think people didn't like Zora is because people felt they were so prioritized by Base. And by the way, I actually like the original vision of Zora, so I've got nothing against the vision itself. I was very against the creator coin narrative, very against the coin every piece of content that anyone creates.
What's the original version or vision that you're aware of?
The original version of Zora before the CoinIt one was artists, creators create a post. They were trying to take the Web2 like from Instagram and turn that into a Web3 mint. So if I create something cool, but I don't want to sell it as an NFT for $5,000 because, the market disappeared for that. And also that's kind of, you can't sell something every day for $5,000. But if you scroll someone's feed and you see, oh, this is an artist I like, I really like that thing, let me just do like a free mint. I don't know whether it's $2 or something. You want to support the person. It goes really fast, smooth interface, and you support the third person, and then you collected it. It becomes a little memory of yours that you like this piece of art. I kind of like that concept. I don't know if it was fully, well, maybe they concluded it wasn't sustainable. Maybe they raised too much money at high enough valuations, weren't doing enough numbers, but I really liked that concept. Maybe it wasn't successful enough. Maybe as NFTs died down, relationship, do you think actually, look, I saw another post about there being a lot of people leaving Base. Like they've obviously abandoned the creator coin narrative. They've said we're not going to be using Base app for that. They're going to be reworking the Base app itself. What's the bigger takeaway here, Brad, about, is this story even about Zora in some ways? Is it about Base? What do you think?
Yes and no. So I tend to just like look at the simplest answer for stuff like this and skew away from the conspiracy theories. So the simplest answer is just that, bro, for this type of platform, which it's focusing on trends, right? You can see here in this picture, platform, which it's focusing on trends, right? You can see here in this picture that it's pairing red light with longevity and cold plunge with longevity. These are all tokens. Shroom with longevity. So the idea, and this is very similar to Zora's previous construction, right? With its previous platform, everything was denominated in Zora token, and that's how it was trying to like bring value to Zora or whatever. Now it's using a similar tactic, but for broader trends. So it's saying, hey, these 4 tokens all are loosely longevity as a trend. So you pair them with a longevity token, and then now that is the thing that is like gaining traction. So as the sector grows, then longevity, the trend token also grows. So it's kind of a play that is naturally paired with a Solana, because Solana is where right now all of the liquidity for net new trends and tokens are launched, right? We're talking about this Web4 thing, right? It launches a Solana shitter. So it's natural that this platform should be close to that. So I say, hey, it's a pragmatic decision by a business operator, right?
Okay.
And Jesse tried to reassure that there was a big post of like, oh my God, all the base team is leaving. We've now seen like the exodus of 3 major platforms shutting down or moving or whatever. One of them being like Zora's new product. I couldn't remember what the other ones were. Jesse responded to that and he's like, no, not at all. Like the post that went so far as to say that Coinbase is shutting down Base.
Yeah,
like,
that was completely,
like,
that was a stretch too far, even for me.
Yeah. So like none of that is in play, but it is a trend that people are noticing, that people are leaving Base.
Okay. I do think in the end, in this kind of market, everyone is looking for the reset button. And I think that is correct. You might not come to the right conclusion, but I do think in general, in fact, Coinbase CEO Brian Armstrong says this often. He says, action produces information. And if something's not been working for you, we just came out of the bull market. And if something wasn't working, then A, that's bad because you're in a bull market. B, we're in a bear market now. And so you got to do stuff. If something wasn't working even in the bull market and it's still not working, you got to do things. And if it means hopping chains for a little bit and trying things in other places, I think you do need to press the button to reset at the moment. Shout out to Captain in the comments saying Coinbase Ventures also on the Zora cap table. I think, yeah, I think that is the case. I wanted to check it with Grok in a second, but let's move it on from here, Ledge. I don't think you need to come in on this. We touched on it predominantly. Is there anything else that you're finding interesting around the markets that you think people should know about?
I mentioned my Web4 bit. I typically would have gone into the MCP server, but I don't want to talk more AI stuff. But you said you had more thoughts on other things on the snapshot, so I'm curious to hear from you.
Okay, so 2 things. The first thing is, let me find it again. The first thing that I'm finding funny is Peter Thiel and Founders Fund exit position in ETH treasury company ETHZilla after jet tokenization pivot. So there's a number of things going on here. The first thing is that I think a lot of people entered into these DATs for quick flips because they're going to get shares in exchange for whatever their tokens were. I don't know what price they bought in, but I guess it was a lower price. They then all these things maybe briefly traded above MNAV and then they compressed. You know, I don't think these were necessarily long-term investments, or people thought maybe they did think that they were going to trade above MNAV for ages and they're going to be amazing investments. I'm not sure how people thought that, but I think there's going to be a lot of exiting around DATs. I don't know if you others saw, I forgot to put in the snapshot, but David Bailey from Nakamoto did some strange acquisition thing where I think he's used shares in his company, which is super undervalued, to purchase some other companies that he's a part of. I maybe got that the wrong way around. Need to double click on it yourself. But my point, the bigger, more important point, is that there's going to be stuff going on with these DATs to either consolidate or change strategies, because it's clearly been a humongous failure. Humongous failure. One of the main reasons we were selling and de-risking over the summer last year was because we saw so many stupid things happening. All the DATs are basically stupid. And we kept saying it. And I remember specifically the Doge that tipped me over the edge last summer. I couldn't take it anymore. So that is that. Also, it's hilarious that they chose to become a jet tokenization thing. I don't know what to do with that information. The other thing that I've noticed, I don't know if you guys have seen this very sneaky reappearance of SBF on the timeline. SBF being the former founder and CEO of I was going to say Anthropic, of FTX. They did invest in Anthropic because they were stealing users' funds over and over and over again to make generationally outstanding venture investments. But the point was, it was done with users' funds. But you have observed over the last week or 2, he's tweeting from his main account. And there are accounts publishing support of it. Here's one tweet, legendary, sharing on screen. FTX was always solvent. No one in the world is more qualified to comment on this than this particular person. He was head of data science. He's saying in this sworn declaration that we were solvent. And I think it's important for people within the industry to make a point, as there's this clear campaign, I think, to get him pardoned, maybe with a view of ingratiating themselves with the Trump administration to get him off the hook and out of prison. that we just kind of set the record straight and reassert the facts as they were, and make the point, which this excellent article from Alex Campbell on X, who I've shared before, who's formerly of Bridgewater, has done excellent analysis on silver, caught the silver trade in a big way, and has shared this information. He did this deep dive into SBF yesterday, and basically it's a very compelling article by Alex Campbell on X. It systematically dismantles the arguments for pardoning SBF. The core argument that he basically puts forward is that SBF's actions were not mere mismanagement or any type of liquidity crisis, which is what they're trying to suggest, but that it was deliberate, premeditated fraud involving the theft and misappropriation of customer funds, which is why he got put in jail. Like that is what the official finding was. So it shouldn't necessarily be in dispute, but clearly there's a bit of rewriting of history taking place here. Campbell suggests that portraying him as a victim of overzealous prosecution is clearly rewriting history here that ignores the evidence of criminal intent. And obviously this is really important because SBF was one of the leaders of the crypto industry. He was paying Tom Brady, Larry David to appear in their advertisements. He was paying both the Republicans and the Democrats, exerting a huge amount of influence over the whole industry and beyond during 2021, 2022, and during his rise. Some interesting stats from the article include an $8.1 billion shortfall in customer funds at FTX, with Alameda Research, who was also CEO of, enabled to run negative balances as early as 2019. So this was going on for years. It was very, very calculated. It was very, very planned. And it included, in this article, both of his parents who are implicated, and it suggested that some of the properties to which they kind of received as either gifts or as part of the whole deal, they still have title of, even after all of these years. And the question I would be asking is, why do they still have title of them? And what is being done to make sure that funds that were used inappropriately should not have gone to enrich his parents, and they shouldn't have title over those properties. So basically, firm agreement with the article written. It's clearly a bit of a rewriting of history taking place at the moment, and I think just wanted to bring that to people's attention. And we shouldn't let it happen. Shouldn't let it happen. What do you guys think? I don't know if you noticed this happening. I thought I wanted to put that out there.
I think it's fascinating that you can run a reputational rehabilitation campaign from prison in the hopes to be pardoned, to even find a way to get access to your X account, be posting, running this campaign. And us, the outside world, at the same time can observe the Polymarket odds and translate that into an environment where we can bet on the outcome of a person's in-prison rehabilitation campaign to be pardoned. It's quite a wild world that we live in. And by the way, the odds are on Polymarket, it's a 15% chance. Although the pardon market only has 125K in volume and only 18K of that is for SBF. But it is wild that this is the world we're living in.
Absolutely crazy. Brad, what do you think?
I was just going to ask, do we know if this isn't SBF, right? This is like his handler that does this for him. I remember whenever he first came out and did a post after several years, and everyone's like, what, the account just tweeted. I remember at that point finding out that it was not SBF himself running it. It was someone that he knows that is running it, and he just like gives him information. So he's not like, in his bed on his phone tweeting, just whenever he feels like it. Based on your reactions, I'm assuming we're not sure.
I don't know, man. I mean, he did an interview with Tucker Carlson from prison.
And that was him.
So, like, yeah.
Zora right now. And getting a phone in prison and internet is not impossible. So
yeah, I would think that you're not allowed the phone and you're not supposed to. But frankly, I don't know anymore, guys. I don't know.
But if I don't have anything else to do, I'd rather run my X account myself and have someone else running it to at least get something to do, right?
He's got the time.
Yeah, you don't need a reply guy.
And also, do you know what, guys? Like, frankly, I don't know. You do get the sense that there's a few things circulating as well at the same time. Again, the context of which is why maybe people are more worried that justice will not be served in the way that it should have been, which is that he should be where he is, not be let out. I mean, and this is not a comment on Binance legal situation at all. I don't know the details. I don't know if CZ should have been in for longer or not in for longer. It's not a commentary on that. But the point is, there was a pardon given. So this administration is clearly in the business of potentially doing pardons for people who are in this industry and for people who might be. So clearly they're in the business of that. They're open to the idea. They've done it for CZ at Binance. And then the second and third thing is that I don't know, guys. Like the various business dealings of the administration, or the adjacent business dealings of the administration in this industry, which is going on at the same time as all of the political stuff, is I think they're deal makers, aren't they? They're deal makers. I don't know what kind of deals can be done with someone like SBF. I don't know if he's got much to offer necessarily. Maybe there's other bigger things at play, but you get the sense this is an administration that wants to do deals. And so if there's a deal to be done, maybe it gets done, whether or not he should be in, and whether or not he was guilty, or whether or not he did steal all of them, whether or not FTX was solvent or insolvent. So that's my thought, but we will have to see. Right. Unless there's anything else, we've got an interesting mix of headlines today. I like what we've got on the docket. Ledge, you're going to talk us through what's been going on in the market. It was pretty volatile yesterday as well as some of the more international factors that we should keep an eye on. What do we need to know?
Yes, absolutely. If you look at the S&P 500 yesterday, you just look at the headline number, it looks like an unimpressive day. S&P is up 10 base points, so it looks almost flat on the day, but also at some point, it was down 1%, and we had actually quite a volatile trading day going on, starting with a report coming out from Bank of America on something that we've also been speaking about on the show, being this CapEx fatigue, saying that all the big AI companies, except for Apple, spending $500 billion plus on AI infrastructure that might not yield returns fast enough on the one hand. And then moving into geopolitical territory, we did have the talks in Geneva. We had talks, on the one hand, between Ukraine and Russia, but we also had talks between the US and Iran, hosted by Omani intermediaries. And just before the talks in Geneva had started, you did see Russia launch a drone attack on Ukraine. That is also when we did see the gold price. Let's get this up. The gold price have a bit of a nosedive yesterday before it also did recover again. And as these talks were being held, the situation got better and the market did improve. On the one hand, we started to get some news that there is some progress being made between Russia and Ukraine, although the media did report more. It's not looking too good. There was a Witkoff post on X saying there is some meaningful progress. Also a better situation on this US-Iran negotiation, which made the market look better. And then what we also had happening, and this is coming from a post by Donald Trump on the trade deal with Japan, which just launched. 4 important elements in there was reported by the Kobeissi letter, being a $550 billion investment by Japan in the US, funding of an LNG facility in Texas, gas power plant in Ohio, funding critical minerals plant in Georgia. And then basically from the midday on, these more positive geopolitical news did help the stock market, helped it close in the green. And what we then also have seen, it's not only that recovering gold, recovering in the stock market, but the semiconductors who had a couple down days partially recovered, with Nvidia and AFCO being up, but a big winner being Apple, because Apple is not in this CapEx discussion in terms of, are they overspending on infrastructure? Had this conversation on the show yesterday with Rahim, and also this Yahoo Finance article, which had the great title that Apple is winning the AI's race by just not participating in it. And the stock market is, at least on the day, clearly acknowledging that.
What's the logic? B's muted, so I can insert myself here. What's the logic behind not winning the AI or winning the AI race by not participating? Is it simply that you are not hemorrhaging funds to chase something that is ultimately going to be a losing battle?
So basically, the discussion here was, okay, everyone's spending like billions and billions on data centers and increasing CapEx spend massively, and Apple is not doing that. And the read of that is not Apple necessarily falling behind, but more so, and that was a discussion that we had for a longer time on the show yesterday, that Apple did really well early on with a ton of R&D spend to get Apple Silicon going and have their own, not rely on Intel anymore, have their own M processors, which are, and from very early on phases have been AI native. So they are now obviously a hardware company. They have the 2 billion devices out in the world, and they have this strong hardware platform so that they don't need to participate in this battle of increasing CapEx spend, building, buying data centers, because they have insane hardware distribution and were early on to build their own hardware architecture, and they can now maybe lean back a bit more in that race and are not pressured to participate in it.
Yeah, I don't mind it, to be honest. I mean, I'm critical of them only because I think some of the way the software on top of inside of it, the way it joins up, I've found quite frustrating recently. But in this specific way, I kind of don't mind the strategy. And it's rumored that they've got a bunch of new physical products coming to market, either towards the end of this year and into next year. And if they're successful, then they just continue to be successful. It takes a big decision, I think, to not get drawn into the big competition that everyone else is having. But I don't know. The more I think about it, the more I like it. Probably need more time to think about it, but the more I think about it, the more I like it. Ledge, I just sent in the production chat on the Iran point. There's been some big moves in the Polymarket betting on US strikes on Iran. So in the last 24 hours, they've all moved up about 20% on everything. So US strikes Iran by March the 15th, which is 1 month away. It's up 20% to 46%, which is pretty damn high, to be honest. By March the 31st, above 50% at 56%. By June the 30th, but 64%. And by December the 31st, 75%, up 21%. Feels like a pretty significant move, all things considered, the type of move that maybe knows something. I know that there was the stuff that Swellermax shared in our Telegram chat overnight was some of the details or some of the reporting that a lot of, I think, planes or carriers were being moved into the region, and that was being tracked. So I don't know whether it's just that public information that got the things moving or whether this is something deeper, but it's something to be aware of. The world is not getting any more kind of stable or calm at the moment. Ledge, we always look at these things through the lens of the markets. So do you have a view here on, thinking forward, prepping forward, if this does take place, and these percentages suggest that they might, is there anything that needs to be done portfolio-wise? Do you have a view, or are you still mostly parked out of it and sitting out this continuous or kind of aggressive arc for the world at the moment?
Super interesting question. And after Give Me Take, I also want to hear from Funky, who has his hand up. So there's two things, right? On the one hand, you can bet is a horrible word, adjust your portfolio based on this Iran situation. If you think that this is gonna escalate, there's gonna be maybe a regime change this year. But then on the other hand, you also have to consider the Russia-Ukraine situation and try to assess, do you think that's gonna get resolved? And because if this gets resolved, then I would expect to see some of the defense industry stocks and maybe also gold having a bit of a move downwards. But then you think, okay, but maybe, hey, if we have now the new conflict coming in the Middle East again, is this outweighing a potential Russia-Ukraine peace treaty, whatever? my thought would be that even if Russia has a positive outcome, that there's still going to be like more conflict and volatility in the world, unfortunately, and especially with Donald Trump as a president. So I would not be willing to, or my portfolio, I'm not willing at the moment to sell my gold or sell the defense stock exposure that I have, because I think there's just going to be more geopolitical volatility conflicts over the years to come. So I would not change this position at the moment, I think.
Okay. I think that's fair. That is one way to look at it. I think you're probably right. I think I'm pretty comfy in my gold position, to be fair. I've hedged a little bit by going short, but I'm still very much net long gold. Pretty happy to hold that. Still holding a lot of cash, and yeah, some select stocks. But yeah, okay, good stuff. We'll keep revisiting that conversation because we do like the portfolio conversation. But I think that's enough just on that specific event. We'll keep an eye on it. Agree with the general sentiment led shed. Brad, let's get into this. Oh, sorry, we're going to go to Funky first. Funky, come in here. Welcome to the stage, man. What's your general thought on what's going on in the world, whether it's specifically to do with Iran? Ledge mentioned Russia, Ukraine as well. There's obviously a lot of volatility. What's your read here? What do you want to add?
GM boys, yeah, no, I specifically wanted to talk about the Iran thing because even though I'm not home right now, I'm in Denver, but the last few weeks, since some of these tensions have ramped up, because I live in Tampa, that is home of CENTCOM. MacDill Air Force Base is the sort of tactical home for all of anything that happens in the Middle East happens at that particular Air Force Base. And leading up to a lot of this stuff, there's been a lot of activity, like where you're hearing fighter jets over my house because they're moving in and out of MacDill. And then I think what was most interesting, just catching up on the chat this morning, that Swellamax pointed out was what's called the Pentagon Pizza Index. Because anytime that there's a lot of, it sounds crazy, but when there's a lot of military action and they can't leave the base, you'll see pizza orders pop off where they're either going to Pentagon, that's where it gets the name, or strategic military facilities. And there's this huge anomaly where there's a tons of pizza being ordered at a Domino's near MacDill. That's the closest one to MacDill at like 10 o'clock at night. And that really caught my eye. So I'm kind of curious to see how this all plays out, but I hope it doesn't lead to military action. There's definitely been some saber rattling.
Okay. Yeah, that's I think the pizza index is almost too well known now. They're gonna have to start doing some, what's the word?
Chinese food.
Yeah, well, they're gonna have to switch foods, but then they also maybe do some fake days where they all order pizza just to throw Iran off. It's gonna have to do some
What if it's Russia ordering the pizza so that Iran thinks
that is just perfect.
America is attacking?
That is perfect. Yeah.
Oh, pepperoni.
Okay. Yeah, that would be, with all of this Epstein stuff going on and all the connections all around the world, nothing would surprise me. Nothing is going to surprise me now. Okay. Second headline, Brad. This is an interesting one in a market which is struggling, from what I can tell. Dragonfly has raised $650 million. What do we need to know here? What are the key information? Why is this important?
Yeah, background first for those who are not aware. Dragonfly, as the headline denotes, has closed their fourth round for 650 mil. Dragonfly is a prolific, or one of the larger VC groups in crypto. They're actually our lead investor at MegETH as well. Yeah, and the note is $650 million closed as Fund 4, right as the sector takes a turn. So people are seeing this as a bit of a positive signal that like there is still appetite out there for LPs to get into the industry and invest. Hasib notes that this is not actually the first fund that they have raised that is actually in a downturn. Their Fund 1 happened during the 2018 ICO winter, and Fund 3 happened after the Luna collapse. So it's actually saying that this is the optimal time to be buying and raising funds, although you do see a bit of a dearth of other VC appetites going down, and I can also attest to this, seeing teams wanting to raise and across ecosystems, and it can be tough right now. Just not a lot of risk appetite for investing in people. One thing that he did note in here was basically the things that have been successful for him in the past. So he cites Polymarket, he cites Athena as these financial primitives that are going to go far, but he's actually still excited about things to come. And basically the article that he wrote, it's called Believing in Exponentials Again, or Believing in Exponentials, and how it's just so hard to forecast how this stuff is actually going to accelerate, especially when you have a tech platform like a blockchain that ultimately can enable a lot of stuff. So the things specifically that they called out were agentic payments, on-chain privacy, and basically just the tokenization of everything, including real-world assets, and saying he's very excited about these sectors. He thinks, when this stuff hits, it's going to hit, and it's going to hit hard. And it's something I also believe in. I actually did a little post yesterday, 2 days ago, where the head of Blockworks, Mike Ippolito, made a post about AI is mogging crypto, which it is, right? We're getting a little bit of a brain drain. Things are going there. And I think there's a lot of early excitement, but I think ultimately that brain drain, the AI uptick is ultimately going to full circle come back to crypto, because the two technologies for me are intrinsically linked. And once they hit the point where they have problems to solve that can only be solved by the primitives that exist on a blockchain, verifiability, permissionless finance, all these things, they will come back, and the two will fuse. So anyone that's straddling the intersection of the two is destined for greatness. Muted.
Yeah, I like the bits that you picked out, the areas that they're looking at specifically: agentic payments, on-chain privacy, the tokenization of everything. It feels, and maybe this is just what it feels like at the bottom of the market, it feels like so much of the same stuff is getting built. I'm curious how someone creates the new thing that people really like. Again, I guess maybe we're just at that stage of the market where it's hard to see. Have you seen Bread in you're obviously involved in the building side here, or maybe you don't want to give too much away, but where is the green shoot out of those three things? When someone says on-chain privacy, okay, what does that mean? Like, Railgun already exists on Ethereum. You can, kind of get some privacy. You already have Zcash. People are huge Zcash bulls. People are huge Monero bulls. Certain people. So these things already exist. Where is it to go? What's the green shoot? What's the net new thing? I mean, we're talking about equity perps. We had perps, and then we had equity perps, and now that it seems to be the hot thing. But is there a net new thing in these other things, or what's your kind of view?
I do think, I obviously am pretty pulled on the AI stuff. So I do think there's a lot to come in the agentic payment stuff. I was actually I did a post last night before I went to bed, where I was playing in the 8004 registry that was created on Ethereum, so people can autonomously trust and review other agentic services across the internet. So I do think there's a lot of surface area to expand there. It's very, very toy-like today, which is not very exciting. I'm very bearish on-chain privacy, mostly because it's an opt-in thing that no one's going to pay for, right? It's not convenient, therefore no one will do it, and no one will pay for it. So it adds friction. So I'm not excited about that. I do think the tokenized everything is also something that has a chance to expand the surface area very wide. Like we're seeing a lot of off-chain success in the TCG space, right? With the collectibles, with physicals. We're seeing some green shoots of that with on-chain instance of it, whether it's Courtyard or BZ or Collector Crypt. Like we're starting to see some of that. We believe that there's definitely a wider scope for tokenizing these things and allowing these things to thrive on chain, and allowing people to actually obtain things on chain, actually just like get extended utility, because it is a tokenized form of something that you can trade and monetize and do whatever, but also collect it in the physical world and actually get something out of it. That surface area is just going to continue to grow for sure. Like doing it to just cards is not the end game for sure.
Okay. Very, very interesting. All right. And then maybe a final take. Maybe I'll go to Legendary here. Question: 650 mil, a lot of money. especially for this kind of type of market. I think. What would you do? What would you do with 650? Like, I think for the reason why I'm struggling with it now is because back then people were piling money into infrastructure. Infra was so, well, maybe in hindsight overvalued, but the valuations were huge. The raises were huge. It felt like that's what it took in order to build something so colossal. Because when you think of infra, you're thinking big, right? It feels like that's now off the table to some degree, and we're working in the parameters that we've got. And so maybe are they smaller bets here? Do you have a view on that? What do you think?
I'd probably struggle to see where to invest 650 if I wanted to stay in that sector. Obviously, investing 650 and I would be easy, but if you want to be in this like financial crypto sector, and this, I do believe in what Brett is saying, that these worlds of AI and crypto will converge, and that this is the native thing for agents to transact with and execute the stuff with. But I think it's still super early, so I think I would probably be the one who thinks, I don't know, like what maturity the fund has, or how long they will keep investing these 650. So I don't know the structure of that, but I would assume it's there for a longer time. I don't know how long typically a Dragonfly fund is running, but I'd probably have a hard time if I wanted to invest all of that right now. And I do think that it's going to be a longer investment period and probably like smaller chunks to begin with.
Okay. Fair enough. Right. Let's get to the final headline before we close out for the show today. This is a very interesting one. This is the news that Tether Gold is enabling the historic first ever gold dividend distribution by a public gold company. The company's Elemental Royalty Corporation. They are becoming the first gold company globally to offer shareholder dividends payable in gold. That's news that Tether today announced that they will be offering this. People will be able to participate in that if they would like. And as you know, Tether is a digital, well, XAUT, which is the Tether version of gold, is a digital asset backed by physical gold, combining the long-standing stability of gold with the efficiency, accessibility, and transferability of the blockchain tech. I think it's super, super interesting. And I think this is partly why maybe they've been accumulating so much gold, right? They've been buying more gold than many of the European central banks. I think Brazil and Poland were the two countries after China that were accumulating the most. Tether is accumulating as much as all of those people. So I think offering people the opportunity to get gold as part of their dividends for gold companies, I think this is very, very interesting. Tether also owning shares in many gold companies. Now they've expanded into that arena. So this is just a beautiful flywheel for their business, I think. Ledge, coming to you here for your perspective. As I mentioned, the thing that I need to go to, I need to go and get the door. So if you want to close out the show, share your perspective, maybe get Brett's perspective too, and I'll be back in a second.
Yeah, absolutely. I do love this one. In particular, because we had the conversation on the show on how I would want to invest gold, keep buying gold, and just buying full ounces is not feasible or reasonable for me compared to the rest of my stock buying. Obviously, I could buy on chain. I'm not doing that right now for tax reasons, but just the idea of getting a gold dividend and hoping that there will be a better tax resolution for that in the future is something I find just very pleasant, something very rewarding about that. I mean, technically, it's not difficult to do this if you already have tokenized gold, but it's beautiful that this is possible. Brett, coming to you for any closing thoughts before we will wrap the show for the day.
Yeah, I'm mostly just looking at where it's actually tied into the blockchain. So I see ERC20 on Ethereum. I see TRC20 for Tron. The token can be traded or moved easily at any time. So yeah, I mean, it's kind of surprising that maybe it's not surprising that it's on those two, given Tether's historical dominance in those ecosystems. But that's the only interesting thing to me. I was hoping you would see it in the next era of blockchains, and maybe honestly, like Tether sticking to these old heads may be the biggest thing that's staving off like a Solana rise, because like it's just a burden to go across for them, or I don't know, maybe it's not a burden. They just don't want to do it for whatever reason. But I think it's probably one of the bigger things holding them back.
Yeah, that's a fair point. I think in the TradFi world, it's a nice narrative if you can tell people, hey, dividends are being paid in tokenized gold. It's an easy to understand case. So from a marketing side of things, it's also a nice story. And maybe final thought, I would love the idea of my little AI agent, my little Web4 agent being out there and just trying to collect some digital gold on his quest to just survive today and not be killed by his own compute expenses.
Insane.
Look, with that being said, that is the end of the show for the day. Thank you to Bcheck for hosting with us. Thanks to you, Brett, for hosting with us as well. Thank you. Thank you for joining us on stage. Thanks to everyone listening, wherever you are listening from. We will, as usual, upload the show to Apple Music, to Spotify. We will have clips coming out. And of course, the most important thing is that we will be back tomorrow, same time, same place at 7 a.m. Eastern Time. In the meantime, have a great rest of your Wednesday and see you tomorrow.